Is it finally time for a market correction? Have the market makers fired off their first warning shots? Or will the markets continue steamrolling ahead? Let's find out. How is it going, everyone? Yas here from Trading Vanguard. I'm a technical trader who trades short squeeze, momentum, and volatile stocks. All of the info shown on this video is not financial advice and just my opinion. So, welcome back to my channel, everyone. Today I'm going to be doing another ticker analysis on the S&P 500. And yeah, we just want to know what's going on with the markets. Clearly, it's been a bit manic recently. I mean, if we look at other assets, for example, if we look at gold, let's look at gold. Yeah, if we look at gold, I mean, gold has dropped how much? 17% in the space of 2 days. Let's look at silver. XAG, yes, XAG. Silver, even worse. Silver's had a crazy drop. 40% in 2 days. Wow. And then if we go onto Bitcoin, let's look at our good friend Bitcoin. We can see again, Bitcoin is just having a bit of a downtrend, and from its last kind of pump, which was 14th of Jan. So since the 14th of Jan, everyone, we can see Bitcoin has had a fall off of around how much? 14%. So clearly there is some volatility in the market. So yeah, some assets are starting a pullback, or even, in silver's case, a major correction. But of course, we're not here for that. We want to know what's going on in the stock market. So let's go back to the S&P 500. And, for me personally, the S&P 500 is kind of the best overall indicator for conditions of the overall stock market. And in my opinion, if you've analyzed it correctly, you can make a lot of money, especially, on blue chip stocks, which, the S&P mainly consists of, if you know which side of the trade to take. So let's not waste any more time, guys. Let's switch on the drawings. So what is going on with the S&P 500? So for anyone who's not seen my first video on it, I have not changed my drawing since then. And this is personally what I believe is going on with the S&P 500. So overall, of course, as you can imagine, the S&P 500 is in a bullish ascending trend channel and has been since, let me zoom out for you guys, has been in this bullish trend channel since around, I want to say, in my opinion, it entered it around 2018. And, during that period, we can see, let me zoom in to make it a bit clearer for you guys, we can see it's kind of had two sides where it's just been bouncing up and down from the top to the bottom of the trend channel. Okay. And within the trend channel, as you guys can see, there are two zones highlighted. Okay, so the first zone, which is the top zone, this is a super important zone. So this is, in my opinion, the overbought / overheated territory, and of course this is marked in red. And of course the opposite is the bottom. So where the zone is marked in green, this is where the recovery is taking place. So right now, guys, the market situation, if I go back, so right now we are in the monthly chart. You guys can see that we are super overheated, despite whether you feel like it is or it isn't. Okay. And, it has been since, if we count the candlesticks here, 1, 2, 3, 4, 5, 6, 7. Believe it or not, the markets have been super overheated, let alone just, bullish, overheated for the past 7 months. Now, this is what I see personally, all right? Now, what I found interesting is the current setup that is going on right now is similar to the 2019 slash 2020 pattern. Now, what happened back here, if I'll zoom in for you guys, the S&P kind of entered, literally just tapped into the super overheated zone and had an instant flash crash down to the bottom, and then slowly recovered itself, which took, I want to say, this looks like maybe a year or so, and then had a slow sell-off, which that sell-off had for about, I'd say probably another year or maybe just underneath that. And guys, what is the situation right now? Well, it's very similar. The S&P came into the overheated territory literally for a few months, and then boom, what do you know, snapped all the way to the bottom. And this was the during the tariff situation back in April 2025, so April last year. So instant flash crash, and then boom, as quick as it crashed, it recovered straight away. And now you can see that the S&P is in this, back into the super overheated zone. Now, if history serves us correct, what I would imagine is going to happen is sooner or later, the S&P is going to have a slower cool off and then come back down to its recovery zone, and will sit here for a while, in my opinion. If I switch it back to the weekly chart, what I've done here, guys, I didn't want to confuse everyone, but what this little indication is, or tool, is a Fibonacci retracement. Now, this is super helpful for anyone trying to identify potential zones where stocks, or even in this case indexes, where potential price targets could be for the future. Now, the way I have done this is I had done the previous highest high. So its last previous highest high before it crashed. So it was in this area. So I'd marked it at the top. And then I had gone all the way to the bottom where it had recovered. And the most, by the way, sorry, this is a reverse Fibonacci retracement. So, but it does work in the exact same way. And what do you know, guys? The results of that Fibonacci retracement tells us the most responsive level, by the way, for anyone who has not got experience using a Fibonacci retracement, the most responsive price level, in my opinion, I've got honestly years of using this tool, is the 1618 level. And looking at the 1618 level, guys, the price level it tells us a potential price reaction could happen is $6,957. So this is where we can see the first potential reversal. And if I switch to the daily, so we can get a bit of a clearer idea of what's going on. A few days ago, or I think it was it was definitely last week, this, in my opinion, is where the market makers fired off their first warning shots. Okay, so we can see, came up, started to test this price level. Again, it doesn't have to be exact, all right? So it doesn't have to be the exact 6,957. No, this is just a rough estimate, all right? So I did mention in my previous video, potentially touching 7,000, and what do you know, it hit $7,002 this week. Between the Fibonacci price level given up to 7,000, potentially even going up to 7,100, and this is personally where I would expect to see a price reversal. And guys, what do you know, the market makers managed to do it, the first gap down, and if we measure this gap down, we can see that the total price drop was around over 2%. And guys, for an index, that is huge. That is super heavy. Now, granted, it did recover pretty much the next day and had that gap closed. However, never think I should rephrase, never underestimate what the market makers are capable of, right? This is just a warning shot to let everyone know that, they have the ability to absolutely slam the price back down once they feel the time is correct. And guys, believe it or not, they will go ahead and do that. So if I go back, look at that gap down, guys. So I just realized they almost gapped the price down below 3 EMA lines. So first, second, and all the way through the third. So realistically, when could the S&P start to have a correction? Well, like I said, nobody knows, but this is where I estimate. So between 6,900 to around up to, I want to say, 7,100. And guys, the market definitely needs a healthy correction. Okay, and what would I expect for the price to come back down to? Of course, back into this green zone. And for those who have been watching me for a while, if you guys take a look, what is waiting for us in this green area? A beautiful open down gap, and that is waiting at $5,720. So if the S&P kind of came up to around this area and then dropped down to close this open gap, and we can see it's got a 92% probability of closing of all of its gaps, then I would say that would probably be the next price level we can expect the S&P to come down to. So what did you guys think about my analysis? Please let me know in the comments below. Or if you guys would like any other ticker or stock analyzed, again, please drop that in the comments below and I'll get around to it as soon as I can. If you guys have found this video useful, please drop me a like. And if you are a similar trader to myself, please consider subscribing, as I'll be posting more content. And also, we are in the process of building a small community, so it'll be great for you to join us on our journey. Once again, I would like to end the video by saying this video is not financial advice. Trading can be extremely risky, and I'd always advise you to have a trading strategy to stay safe. Thanks for watching, everyone, and I'll see you in the next video. Take care. Bye-bye.